Welcome back to Investing Talk Podcast.
Today, we're looking at American Resources Corp. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. We're looking at a company that seems to have, really put itself right at the center of this whole U.S. domestic supply chain issue. American Resources Corp.
Right. That seems to be the core idea here. They want to be a domestic leader focusing on rare earth and critical minerals extraction. But, lots of startups say that. What makes their angle different?
It really comes down to their innovation, specifically where they're getting the materials. Instead of traditional mining, they're focused on pulling these critical elements out of, get this, coal waste.
Coal waste. Okay, that's definitely different. Turning an environmental problem, these huge refuse piles, into something valuable.
Exactly, into a strategic asset for the nation, potentially.
But I have to ask, isn't that much harder? Extracting from waste compared to just, digging up new stuff. Is it cost effective?
Well, that's the million-dollar question, isn't it? And their answer is technology. Specifically, their subsidiary ReElement Technologies. That's sort of their secret weapon here.
Okay, ReElement. What's special about their tech?
They've gotten a lot of attention for achieving really high rare earth purity. We're talking 99.9% plus purity levels.
99.9%. Why is that specific number such a big deal? Does that tiny fraction really matter for, say, military tech or EV batteries?
Oh, it matters hugely. For advanced applications like defense systems or the high-performance magnets in electric vehicles, anything less than that super high purity just doesn't meet the specs.
Okay. So hitting that number basically eliminates a lot of potential competition.
Precisely. And it makes them incredibly attractive when the U.S. government is looking for reliable, high-quality domestic sources. Cuts out dependency issues.
Got it. So potentially game-changing tech, unique source material from waste. Which brings us to the timing. Things seem to have shifted dramatically for them just in the last, month or two? Late 2025.
Absolutely. The why now factor is huge here. Two massive catalysts just landed. First, on November 3rd, ReElement secured this enormous joint deal. $1.4 billion with the U.S. Department of War Office of Strategic Capital, the OSC.
Whoa, hang on. $1.4 billion. For a company that, if we look back, had pretty minimal revenue historically. That sounds less like standard financing and more like a major strategic investment by the government.
It really is. You could call it a national security imperative. The deal specifically targets domestic rare earth separation and, crucially, the manufacturing of NB-Fib magnets.
NTV, remind us what those are.
Right, sorry. Neodymium, iron, and boron. They're the strongest type of permanent magnets available, essential for everything from missile guidance, fighter jets, wind turbines, EVs.
So controlling that magnet production domestically is key. This deal basically cements their role in that critical supply chain.
That's the idea. It shows a huge push by the U.S. to control this sensitive area. Massive validation for American resources.
Okay, that government backing is significant. But wasn't there also a big private funding round in October?
Yes, that's the other piece of the puzzle. It really helped shore up their balance sheet. They did a $33 million common stock PIPE.
A PIPE, private investment in public equity. So that usually means sophisticated investors, institutions maybe, are buying in directly, showing some confidence.
Often, yes. It suggests belief in the story. And there was another private placement, too, bringing the total influx to nearly $33.7 million around that time.
And what's the plan for all this new cash? Is it just keeping the lights on or something more strategic?
No, it's specifically earmarked for growth and execution, things like speeding up new mine development and really pushing the commercialization of their rare earth recovery processes in Kentucky and West Virginia.
So moving from R&D and pilot stages to full-scale operations.
Exactly. It's supposed to be that transition point.
Okay, but before we get totally carried away by the government deals and the fancy tech, we absolutely have to look at the historical financials. Because frankly, they paint a very different picture. A risky one.
You're absolutely right. We have to be clear-eyed about this. The potential upside is huge, but so is the historical risk profile. Their trailing 12-month revenue, barely over $330,000. That's tiny.
Yeah, and the trend is rough too. A 3-year revenue contraction of almost 80%.
And a significant net loss, trailing 12 months, around negative $37.4 million. These are not numbers that inspire confidence on their own.
Not at all. Conventional investors would probably run screaming.
They might. But maybe the most concerning historical metric, the one that really needs watching, is the current ratio. It's been extremely low, sitting around 0.1.
Okay, 0.1 current ratio. Let's break that down for listeners. What does that practically mean?
It means that, historically, for every dollar of short-term debt they owed, they only had about 10 cents in liquid assets to cover it. They were operating on fumes, essentially.
Wow. So this new capital isn't just growth money, it's a lifeline.
It absolutely is. And it highlights the execution risk. If they mismanage this cash, if they don't hit their operational targets now that they have the funding, that historical lack of liquidity could still come back to bite them hard.
So the whole investment thesis now hinges on the idea that the past is irrelevant because the funding and government backing have changed the game completely. It's all about the future execution.
That's exactly the narrative. Analysts are calling this an inflection point. They're looking past the historicals, thanks to the financing and the OSC deal, and projecting sharp improvements in 2025.
Right. They're expecting EBITDA margins to ramp up as the rare earth canonicalization kicks in.
Yep. And even the 2025 consensus EPS estimate, while still negative at about -39 cents, shows a significant step towards profitability compared to where they've been. The market seems to believe they can pull off the turnaround.
And analyst sentiment reflects that belief.
Overwhelmingly so. It's quite striking. Out of 8 analysts covering the stock, you've got 7 buy ratings and just 1 hold. 0 sells.
Interesting. Very bullish, especially given those historical financials we just discussed. What about price targets?
The consensus 12-month target is sitting in the $5 to $5.10 range. So that implies maybe, 29% to 33% upside from where it's been trading recently.
And what are analysts pointing to specifically for that optimism?
A lot of it comes back to that breakthrough purity achieved with their chromatographic separation platform.
Chromatographic separation. Can you give us the simple version of what that is?
Think of it like a super advanced filter, but instead of just catching particles, it sorts different elements very precisely, almost at an atomic level. Critically, it's supposed to be a cleaner, closed-loop process, avoiding some of the harsh chemicals used in traditional methods. That's how they hit that 99.9% number.
Okay, that makes sense. Cleaner, more precise. And that technical edge seems to be driving some market momentum, too. What do the charts look like?
The technical picture has definitely improved. The stock staged a pretty strong reversal off its 52-week low, which was way down at 0.38 cents. Recently, it's been trading in the $3.85 to $4.73 range.
And key indicators, moving averages.
Yeah, crucially, it's trading above both its 50-day and 200-day moving averages. That's generally seen as a bullish sign, indicating an uptrend is in place.
Okay. For traders listening, are there any key support levels to watch if there's a pullback?
Technicians seem to be pointing to support around the $3.40 to $3.60 zone. If the bullish trend continues over the next, say, 3 months, the thinking is it could challenge the upper end of those analyst targets, maybe pushing towards $5.20.
Looking ahead, then, what's the next big hurdle? The immediate test for the company?
Without a doubt, it's the Q3 earnings report. It's scheduled for November 14th, 2025. That's coming up very soon.
And what will the market be looking for in that report? Just numbers.
The numbers will matter, of course, any sign of initial impact from expanded capacity, but maybe even more important will be the qualitative stuff. Any updates, any color commentary on how they're deploying that new financing, progress on the government partnership integration, that kind of thing. It's really the first major checkpoint post-funding.
A real litmus test for short-term validation. What else is on the horizon? Other potential catalysts?
We'll want to see detailed announcements about their mine development timelines now that they have the capital, and keep an eye on their participation in critical minerals conferences. Sometimes partnership news or updates come out of those events.
Okay, and finally, no discussion of a stock like this is complete without touching on the speculative side. The rumors you hear floating around investor forums and such, what's the chatter?
Well, there are a couple of persistent themes. One is the idea of licensing that chromatographic separation technology. If another, maybe larger mining company wanted to use their purification process.
That could bring in licensing fees, royalties, high-margin revenue.
Potentially, yeah. It would be a different kind of revenue stream, less capital intensive than digging stuff up themselves.
And the other big rumor?
Acquisition target. The thinking is a large industrial company, maybe in defense or automotive, desperate to secure its own critical minerals supply chain, might just decide it's easier and faster to buy American resources outright rather than build from scratch.
Which would obviously mean a big premium for current shareholders, but purely speculative at this point.
Absolutely speculative. And we have to bring it back to the main risk: execution. Always execution with these turnaround stories. Remember that low historical current ratio, 0.1.
Right. No room for error.
Exactly. Management has to be incredibly efficient with this new capital from the PIPE and the government deal. Any stumbles, any delays in getting operations ramped up could really hammer the stock price, regardless of the long-term potential.
So, wrapping it up. The core story seems compelling.
Mhm.
You have potentially breakthrough tech for rare earth purification, a unique angle using coal waste, and now significant government backing and fresh capital. The long-term growth potential, tied to huge trends like electrification and national security, looks massive.
It does, but it's balanced by that significant execution risk and the company's difficult financial history. They're trying to transform from a struggling, almost conceptual company into a key strategic supplier. That's a huge leap.
A leap that requires near-perfect management from here on out.
That transition, that leap is everything. History looks bad, the future looks potentially very bright, maybe even government guarantee bright to some extent. The big question for you, the listener, is do you trust this management team to deliver on that promise, to effectively utilize that $1.4 billion strategic vote of confidence? That's the bet.